All right, guys, it's Paul Singh, the Market Speculator with bullsonwallstreet.com. We're talking about how to trade continuation patterns, and we're going to use our live trades in X, which is a steel stock, and FAS, which is the leveraged ETF for financials, three times the leverage of the regular financials ETF. So let's take a look at X here. Now, this continuation pattern comes in play after the initial big breakout. And you can see here with X, we've had this huge breakout, big momentum run, and these runs never go in a straight line, even though X felt like it was going to when it ran here from 20, even below 20, all the way up to about 38. And then over the last couple of weeks, it started to consolidate here. And now one of two things happens during these consolidations. Either the stock breaks down completely here, which X so far has not done, or it continues. And when you get these trends, you have to get these continuations for a trend to take place. They're always going to consolidate. Then what does it do after that? And we obviously want to trade these. These are the optimal times to trade a big momentum move. And the reason for that is because it gives us a good risk reward. And you know, as swing traders, as any kind of trader, you're always managing risk. You're always trying to get that really nice reward to risk. Where can I place my stop where I'm not likely to get stopped out of just because of volatility? A logical place where I can stay in the position through volatility, and then when it makes its big push, I can get that big reward. And this continuation pattern lets us do that. Now, a lot of people think of these patterns in terms of flags, pennants, and all these other kind of setups. I kind of just look at them as consolidations and then pullbacks, holds, or breakouts. And I don't care if it's a flag, pennant, whatever it is. That's a waste of my time memorizing all that stuff. So you can see here, pretty clear here, X pulled back here. Now, the 9 tends to be, especially in this market, a strong indicator of strength, the 9 EMA here, and that's what this yellow line is. And you can see here, it consolidated right up to that level, actually broke a little below that level. And then yesterday broke back up above it. So that's a remount here. So we've got the continuation, pullback, and then remount of the 9. That was my trigger. That was my entry yesterday. And I alerted it to Bulls on Wall Street Trade Report members yesterday. My entry here was right about where we are right now, 36.70 or 75. We're at 36.62, still holding that 9. Now, we talked about reward to risk. Really easy spot for me to put it here, right around 33.40, maybe a little looser here to play that open gap. But I'm risking about 2.5 to 3 points here. And now we have the potential, if this does break out for the next big move, for maybe 5, 6, 7, even 10 points. You can see here, this initial move was 20 points, but I don't need that. I'm risking 2 or 3. If I get 6 to 10 points, that would be fantastic. Really, even 4 to 5 would give me 2 to 1 here. So that's the continuation play in X. This is what you should be looking for after the initial momentum move. Now let's take a look at financials. That's FAS. Same type of pattern here. Huge run post-election. Pretty much a straight line except for that little consolidation here. Now we got the first real big consolidation over the last couple of weeks. Right in here between 40 and 42. Again, we tested that 9 and we showed strength and got to the top of the range here. Now, normally I like to break the top of the range, but I don't mind getting early in a strong sector like FAS. So again, continuation. We've got the break, we've got the consolidation, and now we've got a show of strength at this key level. Our entry yesterday was right around where we are again. I think it was 42, 25, or 30. We're right in that range here. My stop is going to be under the range. So we're looking at maybe 40, 25. Maybe I loosen it to get around that round number. And then the target, I mean, you've seen this here, can move from 28 to 42. That was 12 to 14 points. I'm risking about 2 to 3 points here. So if I can get 5 or 6 points, maybe 47, 48, that would be fantastic. But this thing could even run further, and maybe I'll take partial profits getting out if it truly does put in a continuation pattern. So that's what we're looking at here for the continuation patterns. We want to see that consolidation, and then we either play the pullback and show of strength. That's the key. You need to show strength at these support levels, or you play the breakout. And that's what we're doing here with FAS and X. We'll see how these play out. We've got December seasonality, end of the year seasonality on our side here. Maybe we get a little Santa Claus rally that helps push these hot sectors that are in play up. So that's it, guys, for this lesson here on trading continuation patterns.